So we're seeing rental growth typically in the 30% range for a lot of stuff in Brisbane. You said there's a lot of big players coming in. I can tell you there's a lot more bigger players selling out. And it's no secret, they publish their results. It's in the Financial Review. It's in their reports. Mirvac are selling 1.2 billion. Charter Hall Long WALE Fund 550 million. We had a phone call from a group the other day. They need 200 million for redemptions by June 30. Now, I'm assuming all those numbers they're mentioning are money that they need this financial year. So if they're not under contract now, then there's no chance of getting the money by June 30. Now, when those deals settle at a discount, that will then be the new valuations that the valuers use, and you'll see valuations at June 30 down, and I think possibly the end of this year we will see the bottom of the market. But if you've got property sitting vacant, like a lot of them are in Sydney and Melbourne, I don't know where they stop. I think and it's not because we're in Brisbane, we'll buy anywhere, but construction prices are the big issue. Catherine, we were speaking to one of the leading agents the other day, and a feasibility they conducted in a prime location. You have to get $1,400 a square metre rent to build something new at a 5.75% yield. Well, you get a valuation at 5.75%, but there'd be no buyers. So you can't build them. So we're seeing rental growth typically in the 30% range for a lot of stuff in Brisbane. Business in Brisbane are growing. We've had a massive population increase. We haven't had as much work from home. In the government in the town, as someone said, that the government workers are as efficient at home as they are at the office. They still do nothing, so it doesn't make a lot of difference. But in the commercial end, most are back in the office. So at one of the prime buildings here that 3 years ago the rents would have been in the order of $900 a square metre with incentives in that 45 to 50%. There was a deal done last week at $1,200 a metre and incentives at 20%. So we're seeing a substantial turn in the market here in Brisbane because Sydney and Melbourne are always seen as the financial centres for Australia. And people are and that's where your big super funds are, and they're prepared to speculate building a 50,000 square metre building. They don't do that here in Brisbane. So they will want to have some form of pre-commitment normally before they start. So we just haven't had the overhang of supply. And because we do have more growth and we haven't had the big IT sector, we haven't had the vacancies. Now, certainly your B and C grade will continue to struggle because what tenants require now, the cost of doing them, probably make them not viable. But for the A grade buildings, there is a serious shortage. There's a shortage now, and from what I'm hearing in the market, there will be no more buildings start construction in the foreseeable future.